Welcome to my YouTube channel. I'm Halik, and today we start with interesting review. You know that SpaceX officially have their IPO on June 12, 2026 under the ticket SpaceX on the Nasdaq. Elon Musk pulled off the largest initial public offering in global financial history. But you look closely at the numbers, things get wild. The company is posting massive losses previous year, yet it's valued in the trillions. Today we are doing a complete financial breakdown of the SpaceX IPO, the share structure, the hidden IE merger, the actual revenues, and whether this stock is a buy or an avoid. First of all, I want to start with IPO parameters, share count, and 135 starting price. Let's start with the hard data. Pre-money valuation. SpaceX was priced at 1.7 trillion for the IPO. However, once the opening bell rang, massive buying pressure quickly pushed its market cap past 2.6 trillion. The public float, SpaceX offered exactly 555,555 Class A common shares to the public. These raised roughly 75 billion in fresh capital, representing a tiny public float of just about 4% of all shares. And the main aim why SpaceX become public company is in order to raise as I said, 75 billion money to make more capital for investing and developing. And next, the stock split. In May 2026, right before going public, SpaceX executed a 5-for-1 stock split. This brought the fair value of a single private share down from roughly 526.9 to 100.32 dollars per share. Elon Musk did this on purpose to make the nominal share price comfortable and accessible for retail investors. The IPO calculation. On the evening of June 11, the lead underwriter Goldman Sachs locked in the final IPO price at 175 per share. But if you question it, why did it start at 175? First, it included a healthy premium over the 105 split price based on the insane institutional demand during the roadshow. Second, the order book was heavily oversubscribed during the pre-market on June 12. Institutions and brokers bid up the price due to a severe shortage of available shares. Only 4% of all pile of shares. As a result, the stock opened way above its IPO price and quickly rallied to an all-time high ATH of 225.6 per stock. Let's look about the 2025 financial mystery. Why pay 100x revenues for a losing company? The biggest question, according to the official form S1 filled with the SES, SpaceX consolidated revenue for 2025 was 18.7 billion, up 33 year over year, but at the same time, the company reported a massive gap net loss for 4.9 billion. GAAP is standards of financial statement in United States. How does a company losing nearly 5 billion get $1 trillion valuation? That represents price to sales, a multiple of around 90x, essentially 100 times its annual revenue, not net income. To understand why investors are okay with this, we have to look at the three distinct business streams inside the company, like revenue streams that generate money, liquidity for SpaceX. SpaceXAI, the AI infrastructure. In early 2026, Elon Musk legally merged his AI startup XAI into SpaceX. In order to make IPO SpaceX successful, they created a new segment called SpaceXAI. This segment includes the X platform, formerly Twitter, the Grok AI model, and a massive supercomputing infrastructure, data centers. In 2025, this segment alone generated a massive operating loss of 6.4 billion because they were aggressively buying tens of thousands of advanced AI chips and building mega data centers. Wall Street isn't valuing the SpaceX as an aerospace manufacturer, not only as aerospace manufacturer. They are valuing it as the world's largest private AI infrastructure company. Second stream and the main for now is Starlink. It's like cash engine. This is the crown jewel of profitability. In 2025, Starlink brought in 11.4 billion in revenue, 61% of total SpaceX revenue, and generated 4.4 billion in operating profit, with its subscriber base crossing 10 million in 2026. Starlink cash flow completely subsidized the rest of the company. Space, traditional aerospace business of SpaceX. Falcon 9 launched and Starship development brought in 4.1 billion, 22% of all revenue in 2025 for SpaceX. Growth here is modest, like 8% year to year, mainly because 75 of SpaceX launchers are internal. They use their own rockets to deploy their own Starlink satellites. So investors are paying off an exponential growth trajectory and ultimate vertical integration. SpaceX rockets launch Starlink satellites at the cost. Starlink generates billions in pure cash. That cash buys the computing power to dominate global AI. Next point that I want to overview is the execution premium. Why investors try Elon Musk? Elon Musk is very controversial businessman. His behavior is first of all about marketing. More investors and people know about him, not only about him products but also about his marketing. They firstly know about Elon Musk and then like, interesting. What his has companies, what products he is like promote, like Tesla, SpaceX, Starlink, and like testing that it's like good. So like company is rise. So why do billionaires and pension funds trust Musk? We need to a little bit dive in and make decomposition. Like SpaceX makes the initial IPO and sells only 4% of all stocks of the company in order to fundraise $75 billion for their needs for growth. And from this 4%, nearly 80% is for legal entities, for big funds, and 20% for physical entities. And actually it's also a huge amount, because if we dive in IPO of other countries, nearly only 5-10% major physical entities can buy. And if we talk about, as I said, why billionaires and pension funds trust Elon Musk, despite these massive cash burn rates, actually it comes down to a concept called the execution premium. Musk has proven track record of disrupting capital-heavy industries like electric vehicles and space travel when everyone else said it was impossible. And all it starts from his visionary. And SpaceX started more than 2.5 decades ago, when he sell their part of PayPal and investing $90 million in this startup. There was. Today's SpaceX holds a literal monopoly, controlling over 80% of all payloads launched into orbit globally. No one else has an operational equivalent to Starship. On top of that, they have a massive backlog of guaranteed government contracts with NASA and the Pentagon, plus a brand new 2026 enterprise deal with Anthropic to lease AI computing power for $1.25 billion a month through 2029. That provides a massive long-term revenue security. And for investors, is a main point and trust to a company that they have some forecast of increasing revenue, operating activity, that share stocks will be rise, the dividends, maybe even dividends. But Elon Musk said that SpaceX will be profitable, net income will be nearly in 5 years. So but he said we will be do that for that money, so you can trust us. At all it works the same in all countries, in all companies. Next point, cashing out, lockups and post IPO price action. For example, if you are a real investor buying SpaceX shares directly on an open market, you can sell and lock in your profits at any time. There is zero holding restriction for the public. However, for insiders, early venture like Founders Fund or Craft Ventures, large institutional backers and employees, there is a strict 180-day lockup period ending in December 2026. Until then, they cannot sell a single share. Will the price crash when the lockup expires? Historically, when insider shares unlock, massive selling pressure hits the market because like employees and early insiders want to fix their profitability, live their wealthy life. For example, analysts assess that nearly 5,400 employees, early insiders become millionaires by paper, and nearly 400 become their net worth by shares more than 100 million of dollars, just imagine. And if you like my video, for example, like that, I want to make some announcements. Next video will be about Facebook mafia, about employees and first insiders. When Facebook also become public company in 2012, and nearly more than 1,000 people, employees, insiders, become millionaires. And we will investigate utopia of all people wanted to live. What with that money what is this money did that employers, buying house, cars, and all of that. So stay tuned, subscribe, and comment. What do you think about that video? And let's go to continue about SpaceX. The goal, what is the goal of the IPO and changes to the board? Why did SpaceX finally decide to go public? The 75 billion raised from the IPO is already a market for the three massive capital expenditure CapEx project. Before, in previous years, Elon Musk said that SpaceX become public when company run a rocket to Mars, but now he started it before. And so why is it started? First of all, they need money. As I said previously, they need for CapEx $75 billion to improve AI infrastructure, funding the non-stop purchase of AI servers, cooling system, and power grids to win the AI race. You know that a major in Texas, where also a headquarter of SpaceX now is boom of data centers. Many companies, because of lower rules of regulations in Texas, started to build their data centers. Also because of that power grid system of US is have east side, west side, and Texas has their own transmission system, and it easily to build new transmission lines to rise to rise grid production of electricity. And so on my channel I'm observe Texas grid system. If you're interested in that, see that video on my videos. Okay. Yes, SpaceX needs money for AI infrastructure, then Starlink West 3. Rolling out new next generation satellites capable of direct-to-cell technology, delivering satellites internet straight to regular smartphones anywhere on Earth. Um, Next, the Starship Mars program, funding a fully reusable deep space system which currently operates at a loss but holds the key to the future dominance. Will Elon Musk lose control over the company? Not the shares. While SEC and NASDAQ regulations require public companies to have a majority of independent directors on the board, meaning we will see new faces from institutional giants like Vanguard and BlackRock. Musk structured the IPO apparently. The public bought Class A shares, which carry minimal voting rights. It's like strategic reason, by the way. Musk retains the super voting Class B shares, ensuring he maintains 50 to 60 of absolute voting power. He remains the undisputed leader. Conclusion. What I want to say, could you buy out the entire company? To sum it up, can a billionaire or rival corporation just go out and buy all the shares of the market? Actually, no, because like assessment is like more than 2 trillion now. But not only about money. As I said in that video today, only 4% of SpaceX stocks is currently liquidating and trading on the open market. The remaining 96% is tightly looked up by Elon Musk. Early strategic partners like Alphabet, Google, and Fidelity, and internal employees. You can buy a piece of the future via your broker, but Elon Musk is keeping the keys to the kingdom. What are your thoughts on this valuation? What do you think in general about SpaceX IPO? Like, is the SpaceX is multi-trillion dollar genius move, or is just AI premium overhyped? In the end, I want to finish with a legendary phrase from movie Wolf from Wall Street, when Matthew McConaughey said to Jordan Belfort in the movie, "No one, nobody. I don't care if you're Warren Buffett or you're Jimmy Buffett. Nobody knows where is share stocks going up, going down, sides, or in circles. What you can say about like stockbrokers?" So we'll see what will be in the future. Thank you for watching that video. Subscribe, comment, and see you soon.